Happy New Year, everybody. I hope you had a good Christmas and New Year's, and welcome to 2023 with Prosperous. So myself and Billy, coming into 2023, thought we would discuss where we see the best opportunities in the local stock market in Singapore, and then potentially in the world's largest stock market in the US. So I think we've all seen in 2022 it was pretty painful in terms of stock market performance. I think everyone's portfolios has taken a huge hit unless you were 100% invested in energy, then you might have done quite well. But besides that, I think most people have suffered a pretty decent drawdown in 2022. So hopefully 2023 we're going to be turning a corner, but I wouldn't hold my breath on that. Yet the macro picture is looking a bit more positive, I think, Billy, in terms of the US and the global economy. I think the inflation numbers are coming down. Interest rates look like they're going to go on pause soon. So what's your general outlook for the market this year?
Yeah, I think I guess we talked about it last year, right? Towards the end of the last year, I think that there will be a recovery this year. But of course, for this year, I guess is about asset allocation, if you ask me. So it's about getting your investment into variety of sectors, get yourself into some defensive stocks like the REITs and consumer staple, and also take advantage of the recovery, especially with the reopening in China, like some of the
Mm,
sector stocks as well. So I think, and then of course to take advantage of the big banks, which I think will still continue to do well in Singapore. So yeah, if you ask me, I think this year is about investing into the different sector and choosing the winners in these sectors to protect your portfolio.
yeah, so in that vein, I think we're going to take a look at a few Singapore stocks that are, sort of our top ideas for 2023 and a couple of US stocks as well. So Billy, do you want to get us started with
Yeah,
top stock idea for yourself in 2023, whether that's Singapore or the US?
yeah. Maybe just start with Singapore. So if you ask me, I don't think Singapore is one of my top picks. I think that the reopening in China will help the tourism sector, especially in Singapore, to recover. I think even before the reopening in China, Singapore has done pretty well, and that I think going forward we should see the return to normalcy for the Genting Singapore. So I think that's one of the stock pick that I have. And then of course, in terms of defensive a bit, I would go with Sheng Siong. I think it is known for its resilience. So in the
Mm,
case of a recession, I think Sheng Siong will still do well. So I think you have to diversify it a bit, and selecting your top picks at the beginning of the year. So that's how I'll go for it. And last but not least, I will choose one growth and new stocks. Not really new, but in still yet to turn profitable. I will go with Neo. I think
Neo, yeah.
EV has I think it's a very exciting space, but it's very competitive. So it's really a very risky bet on this one. But I think you want to give yourself a bit of exposure in the growth space as well. So I'm going for Neo with this one. Yeah.
Okay, great. That's interesting. I guess for myself, this year I'm kind of in Singapore. There are quite a few opportunities, as you said, with China's reopening, but then also I think more broadly, just on longer term themes, there are a couple of interesting, companies operating in certain spaces. And for me, like, one is Semcorp Industries, which is really a pure play on renewable energy. It's probably the only, or it is the only pure play renewable energy company listed on the Singapore Exchange. So I think for that reason, it's trading or will start to trade more at a premium valuation. What it had done a few years ago is it had spun off Semcorp Marine, which is its more legacy like offshore marine division, and now it's focused solely 100% on clean energy, or at least energy. There's a big portion of it that's still conventional. I think, the majority of its profits still come from the conventional, gas, natural gas, providing natural gas for customers in Singapore. But the clean energy assets that they're owning and that they're starting to produce power from are starting to become a bigger piece of the pie for it. So in 2020, it unveiled a brown to green transformation, which means it's going to try and turn its power portfolio from more dirty fossil fuel producing power sources towards more clean energy sources like wind and solar. So in that vein, they've started to accumulate quite a few clean energy producing assets. And the last quarter of 2022, they made three pretty big acquisitions in China and in India as well, in quick succession within about 10 days. So I think they're on a pretty good trajectory to continue to grow earnings, continue to grow a dividend as well, which is something we will want to see in this kind of uncertain environment. I think in beyond that, in the REIT space, I think there are lots of interesting opportunities. I think one of the biggest ones for the China reopening is Mapletree Pan Asia Commercial Trust, which
Yeah.
is that was the REIT that came from the merger between Mapletree Commercial, which has its Singapore assets like Vivo City and Mapletree Business City, and then also the Mapletree North Asia Commercial Trust, which was the Hong Kong assets, along with the China office and also a couple of Japan offices and Korea offices, right? And so the China offices and the big Hong Kong assets like Festival Walk, they really took a hit, especially Festival Walk during the riots in Hong Kong and then the protests in Hong Kong in 2019 and then the pandemic. But with Hong Kong reopening along with China, I think that's going to see a rebound. And so I think there's a little bit more optimism for retail in Hong Kong as well as office in China, right? So Festival Walk is a massive, massive asset. And so that's going to have I think, a positive impact for Mapletree Pan Asia Commercial Trust. So in terms of retail shopping in Hong Kong, I think they could be a big REIT benefit from the reopening. Beyond that, I think there's opportunity in some of the maybe smaller cap names in Singapore. I think one of the interesting ones is AEM, which I think Billy you've written about before, the chip testing company. They're really
Yeah.
tapping into a longer term trend, right? I mean, the whole China reopening is great for the world. I think it's good for supply chains, but it's really not going to change the long term pivot away from relying solely on China. So I think there's going to be a much bigger reliance on manufacturing, whether that's in Malaysia or India or Vietnam or anywhere else in Southeast Asia. And so this is a slow transition and it'll be a slow pivot. It's not going to happen overnight, but because AEM has a lot of its testing manufacturing facilities or testing facilities in Malaysia, I think they will probably benefit from, the structural demand for chips, with Intel being a big client of theirs, but also just the whole chip war and the restrictions on China. I think that will benefit AEM as well longer term. So I think that's one to watch this year. Uh, and how about the US? What are you kind of ideas for the US? I mean, it's been a pretty ugly year in 2022 for the US stock market. So where do you see the opportunity this year?
Yeah, I'll go with my favorite. I'll go with Microsoft. If you ask me, I still think that
Mm,
structural growth is there because the change towards digitalization. I think that's one. Of course, they are venture into gaming. Of course, the Activision position has seen some disruption on that front, but I still think that on a longer term basis, I think they are there. And then the thing that I like about the company is the collaboration that they've been going after. I mean, the collaboration that they have with Netflix. How they actually, I think this is what it would be look like for the tech industry going forward, that there will be a lot more collaboration rather than solely monopoly and controlling it on your own. So I think if you ask me, I think on a longer term basis, I think Microsoft is one topic that investors should really go into. Yeah.
mm. Yeah, interesting. I guess from my side, I'm going to be a bit more maybe cheat a bit on the picking of the stock. It's not just stock, it's an ETF. But for me, I think real estate took a real hammering in 2022 in the US, the REIT space. And there is a great Vanguard real estate ETF. Ticker is VNQ. And that really just holds a massive, massive array of different REITs within the US. I think with the pausing of rates coming up, I think the underperformance in REITs last year could start to reverse this year. As we know, in inflation environments, real assets and obviously real estate, which REITs own, can be inflation hedges, right? They can start to up rates, they can start to up rentals, and to keep up with inflation. And a lot of these rental contracts can be CPI linked as well, so that helps them sort of protect them from inflation. So I think with the Fed starting to see the end of the rate hiking cycle, I think REITs could start to come back into favor. And so VNQ is a really good vehicle for investors if they want to start investing into US REITs without having to pick, because it's such a massive REIT market. I mean, we talk about Singapore being a REIT market, but the US REIT market is the world's largest, right? And it's been around since the 60s. So there's a ton of REITs out there to pick from. But I think for people that just really don't have the time or the in-depth knowledge about REITs in the US, I think the Vanguard Real Estate ETF is a great option to play that trend.
Do you have the
Yeah.
same view for the Singapore market?
I think for the Singapore REIT market, I'm a bit more predisposed to actually, focus on specific winners rather than a massive ETF. Mainly because I guess maybe I'm also more familiar living here and just researching the REITs in a much more in-depth fashion. But in the US, there's, I think each of those subsectors like office or industrial or data centers, they're massive in their own right, right? And you probably have to be specialized within each subsector itself. But I think within Singapore, there's a bit more of a an argument for saying that you can own some REITs because first off, they have you don't have dividend taxes here, so you can just receive them, and if you like the payments and the track record, that's good. Whereas in the US, I think all REITs are obviously 30% or withheld, so that's something to consider. Same with the ETF as well, obviously. But there's really no difference, I think, with the dividend taxes stays at 30%. And Singapore REITs tend to be higher yielding. I think that's also another key, which in the US you don't tend to get as much yield as you would in Singapore. But yeah, no, that's an idea. I think that for investors who don't want to dive into the US REIT market or in depth, that's a really good play on the sector, and it's a bit more taken a beating, and it's taken a beating relative to the market. I think it was down sort of like 26% last year versus, the S&P's 20%. So there's opportunity there, and it's trading at a pretty good discount in terms of its PE over the past sort of 5 and 10 year averages. So I think real estate is one of those that investors can have a look at. Any more ideas on the US front, Billy, or is Microsoft your top pick?
Yeah, Microsoft is my topic, but if you wanted to buy into something that is undervalued, if you ask me, I think you can
Mm,
always look at Disney. I think the
mm,
risk is still there, especially with the streaming business in terms of the competition and all that. But I guess if you
right.
look at the not in terms of the branding and marketing of the company, I think as well as the list of content that they have, I think it just gives them the strength to recover eventually. So it's really a matter of time. But
Mm,
I mean, I think if you look at I guess, like I said at the start of this, is about positioning it based on the sectors. If you have a bit of, if you're already buying into growth and tech stocks, you probably don't want to buy into companies like Disney, which are exposed to some of the downside
some of
risks
the
that,
downside.
yeah.
Yeah,
So
yeah.
yeah,
No, that's a good point. I think in that I'll probably take the flip side. And another pick for me is something that's more maybe more resilient on the earnings front. It's healthcare. So that's a healthcare stock named Thermo Fisher Scientific. So the ticker is TMO. And what they do is, they own a stable of massive brands in medical devices, biotech testing, across different subsectors of healthcare. And so a lot of hospitals, a lot of biotech companies rely on their testing equipment. And so they really just provide the nuts and bolts for healthcare companies, everyday healthcare companies in terms of their equipment, in terms of their testing device, in terms of things that need to be implanted into people. So these are things that generally healthcare it tends to be more resilient during earnings recessions. Obviously, it's not immune, just like any other sector, but earnings tend to hold up better in healthcare. And Thermo Fisher Scientific is one of the leaders. It has grown by acquisition, so that's something to watch. It may slow down its pace of acquisitions given the higher cost of capital right now with interest rates being higher. But it has a really strong balance sheet, has really strong free cash flow, operating cash flow. And so I think it's one of those leaders that even if we do have a recession in the US, it can still hold up, I think, relatively well in its earnings. And the earnings profile for it is also pretty international. So with a weaker dollar this year, you could see a bit more upside from foreign currency for the company overall in earnings. So I'm a bit more defensive, I think, in my outlook for the US this year positioning, or taking up beaten down sectors that I think look pretty good value. So I think that's it from us for today. Hopefully you guys enjoyed some of the ideas that we put out there. Obviously, please do your own due diligence before you think about buying anything, and do your own research and be comfortable with that. Until next time, thank you for tuning in, and thank you, Billy, for sharing your picks as well. We will see you in a few weeks. Bye.
Mm.
Bye.